Hey, Kyle, welcome aboard. Thank you so much for joining as the Chief Financial Officer from Smile Direct. How's it going?
It's going well. How you doing? Good to be here.
Very good. Thank you so much for being here. This is so cool. We've got so many questions for you, and I hope, if you don't mind, we'd love to just get right into them.
Yeah, that sounds great. Love it.
Awesome. Thank you. Throw you right into the line of fire. So, what is your opinion? Why are so many folks shorting Smile Direct? It seems like you're at like 34% short right now. The stock has gotten pummeled. I would imagine much by these short sellers. Kind of align these things here. What's going on? What are people complaining about?
Tough questions from the start.
And quickly, since this is all about clean teeth, I'm going to drink through the straw here, my coffee. But yeah, go ahead.
Perfect. Yeah. Well, look, I think anytime you do something disruptive, as with many other disruptive businesses out there, it takes time to understand the business model and the complexity. And I think if you look at our story, and it's been a short one at that, with incredible success over a very short time period, but it's a difficult business to understand. And so there's a lot of noise, certainly from an investor perspective, if you look at what's been out there since we've gone public. And I think the important part for us is really continuing to focus on the mission that we have as a business. We're a very mission-driven brand and a company, and I'm sure we'll talk a lot more about that. And we've got to stay focused on executing against that plan. And so, I think if we do that, the short volume that we have on the stock will take care of itself in time. But a lot of that is just associated with purely the noise that we have around the business, very similar to many other disruptive brands that you see out there in the market today.
Got it. That makes a lot of sense. So there was a talk about, some folks, because one of your competitors, I believe, is, and I imagine you do as well, is Invisalign. But the difference with Invisalign is that people have to go to a dentist, and correct me where I'm wrong here. They've got to go to a dentist and they get the professional molds done or whatever. Smile Direct, my understanding, is more of something that you could do from home. This is why your company name is Smile Direct, because you're bypassing that normal dentist chain, which is very expensive. I mean, I had Invisalign. I think it was like $5,000 or $6,000 or something crazy, right? And so, can you speak a little bit to those differences, and then maybe also some touch on why some folks have said maybe there's a downside to skipping that dentistry? Are certain people's gums not capable of maybe receiving aligners, and could those cause problems?
Let me be clear. There is 100% a dentist involved in every single one of our cases. The only difference is dentist or orthodontist, right? The only difference is with us, our members have the option to do it 100% remotely. They could also start their journey in person at a dentist office, but we have come up with a teledentistry platform so that you can interface with your dentist completely remotely. Very similar, quality of care, standards of care, clinical outcomes, clinical efficacy, but you can do it all through our teledentistry platform versus having to go in person every couple of weeks to see your ortho. And so I think the decision that people are making in the marketplace today is, do I want to have that in-person experience every couple of weeks, or do I want to use a teledentistry platform? If they use a teledentistry platform, we win today the vast majority of the time. And one of the initiatives that we're focused on, which the launch of selling through the dental practice, is actually starting to take share from those people who actually want to go in person. And I think if you look at, you go to our website, you can see directly on there the why Smile Direct Club versus Invisalign. And I think there's a lot of very compelling points there that will help people understand that they can get a safe and clinically effective outcome, but do it at a price of $1,950 instead of $5,000 to $8,000 or 3 times more expensive. And so all of that is made possible by the teledentistry platform that our doctors use.
The teledentistry, are you using Teladoc to set this up?
So we're not, but it's a similar platform. It's our proprietary technology that we created, and our doctors use that portal. They can video interface directly with their patients or our club members through that platform. Got it.
Now, the dentists who answer the call, so to speak, are these employees, or are they subcontractors? How does that work?
Yeah, so we're set up legally as what's called a dental service organization. And so we contract with professional corporations that are independently owned by dentists or orthodontists, and we provide a range of non-clinical services to those professional corporations. So they're not employees under the strict sort of legal standards that we have to abide by, but there's lots of dental service organizations that have operated for a long time in brick and mortar practices, and we're structured in a very similar fashion to that. It's just all done using our teledentistry platform. To the consumer, it's no different, right? They view when they come to our website and they choose if they want to go to a dental practice, or if they want to order an impression kit, or if they want to go to our smile shop. They view that dentist all part of our network and view the entire experience as part of Smile Direct Club.
Got it. Okay. Now, what about the pandemic? The pandemic seems like it hit revenue a good amount. Lost about 100 mil compared to what the 750 that you had in the prior year. How have things come back? Has it been slow growth coming back? What is it taking to get people to come back to Smile Direct after COVID? And you'd think that, hey, it's you could do it online. You don't have to go to a dentist's office, but it seems like maybe people care less about dental care right now during the pandemic. How has that been hitting y'all?
Yeah, so I'd say that if you look at the pandemic when it initially happened, for us as a business, I think what it really just highlighted is the agility and flexibility that we have from a business model perspective. Mm-hmm. So, people come to our website. We've got almost 5 million unique people per month that are coming to the website every single month, and they're choosing if they want to order an impression kit or go to one of our smile shops. Prior to COVID, about 90% of people were going into a smile shop. We had to shut all of those down in the early stages of COVID, and 100% of people were going through impression kits. And so just a complete pivot in the business model. And as we've come out of COVID, we've been able to rebuild our smile shops in a way where we're operating them at a much higher utilization. And so pre-COVID, let's say maybe the shops were 20% utilized. Today, they're closer to 60% utilized. So the shops are much more profitable. We've rebuilt it in a much more scalable way as we think about the longer term trajectory. And we've also built partnerships with dental practices. We're in about 500 practices today, and that's rapidly growing as well. So I think COVID has enabled us to change the business model from a perspective of where consumers are going and how they're interacting with us. From a revenue perspective, as you mentioned, down about 100 million. I think if you look at it from a quarterly perspective, we really saw the biggest impact of that this past quarter in Q2 of 2021. And if you look at our core demographic, and it goes back to the mission of the business and what we're so passionate about, our household income on average is about $65,000-$70,000 in household income.
So the average, household income is actually on the lower side, because regular individual income is somewhere around, I feel like 59,000 in the United States or something like that. You're saying household income. Okay, got you. So lower demo.
Household. So it's a lower demo. And that's, what the mission is all about. It's about, democratizing access to care, making it affordable to everyone, making it convenient for everyone. But that demographic in particular in Q2 from a macro perspective is hurting, right? A lot of the stimulus packages have worn off. If you look at the impact of inflation in particular, it's hurting our demographics. So we don't believe there's any sort of long-term fundamental changes to the prospects of the business as a result of that. But certainly some near-term headwinds if you look at Q2 in particular as a result of some of those macro factors. And that's why moving upstream to someone who can afford to pay $5,000 to $8,000, but they realize why would I pay that 3 times markup when I can get safe and clinically effective outcome that Smile Direct Club is going to guarantee for life. Why would I do that when I can pay $1,950? And so that's why diversifying our demographics is so important long term.
Now, what about? I'm just looking here. It seems like you've got long-term debt as of the last filing here, somewhere around 733 mil. Lease is only about 26 million of that. Where's all this debt from? And how does the debt affect your the potential for having to raise capital? Looks like last quarter you had about 376 million in cash, receivables about 214. Do you have any trouble getting people paying for your receivables or any issues with the liabilities you have?
No. So if you look at as you point out, between cash and the receivables that we have, well over 500 million of liquidity. And we think that certainly gives us enough liquidity on the balance sheet to get us to cash flow profitability. And the debt that we raised, we did a convertible offering in March of this past year, and that offering comes due in 5 years. It was a great deal where the current shareholders took on minimal dilution, right? So we put in a clause in there where our shareholders don't take on dilution until the stock was up 100%, so into the high 20s before the existing shareholders would take on dilution there. So
because that was done around $10 or so.
Yeah, we struck it. It was actually slightly higher than that, but we put a cap call where it was up 100% before there was any dilution. So it was a really low cost of capital. The all-in cost of that debt is about 2% a year. 0% cash coupon bond. So very efficient cost of capital for us to grow the business, and certainly finances the cash burn that we have over the next several years. If you look at the burn that we have, all of that is associated with just the sheer growth initiatives and opportunities that we have as a business. So, we're in what we believe to be the very early stages of a massive market opportunity. We think there's 500 million people globally that have some type of crowding or spacing issues within their teeth and can also afford to pay for treatment as well. Less than 1% of those are treated annually. So we're investing heavily in our brand to be able to capture market share there long term. We're also
it looks like you spent like 3 times as much money on marketing this last quarter than you did in 2020. Is that where most of the money's going to, or like how do your manufacturing costs scale? It actually looks like your cost of revenues went down despite your revenue going up substantially from 2020 to 2021, at least on the 3 months ended in June.
Yeah, so we've automated a significant portion of manufacturing. If you look at our long-term target for our gross margins, we've got an 85% gross margin target out there. A lot of that has to do with the automation that we've built around manufacturing, and we're pretty close to achieving that target today. So gross margin, to your point, we've come a long way there in a very short period of time.
So how do you do that? I mean, because you're manufacturing a product. It looks like right now you're somewhere around 79%. But how do you go from let me rephrase my question. My understanding is you sell products, but you also have the service. Is the product just very high margin then? I mean, I imagine it must be. I mean, because they're molded, like essentially plastic. It can't be that expensive to actually make the individual product. It's more the marketing and acquiring the customer and getting it to the customer, and maybe the service of providing the teledoc experience, right? Well, I shouldn't say telehealth experience. Telehealth experience.
That's right. And look, that's what we found so fascinating about this industry, right? The cost of the plastic in perspective of the cost of the total system is very, very small. So
I see.
An Invisalign would sell the aligners for maybe $1,250 to the dentist or the ortho. They mark that up 3 times and sell that back to the consumer. And so that's where we saw the opportunity for us to come in with a product that is, from a clinical standpoint, safe and efficacious, but costs 3 times less at $1,950. So there's the cost of the product itself, and then there's everything that wraps around that. So we're investing heavily in the brand today. One in 2 consumers, if you were walking down the street and asked them if they're familiar with Smile Direct Club, would say yes. So our aided awareness today is very, very high, and we're building a brand there to support long-term growth. But it's also the growth initiatives that we have as well. We're investing heavily into innovation, research and development to continue to disrupt ourselves on the product side. We're investing heavily in international expansion. We just announced France. That's our 14th international market in just over 2 years that we've expanded into. And so there's a lot of areas across the business that we continue to invest in, which is where you see the cash burn that we have quarter to quarter coming in. It's really to position us for the longer term growth that we see, just given the massive market out there.
That makes sense. So you mentioned earlier inflation. Where are you seeing inflation? I mean, the cost of the plastic going up can't be that much of a burden to y'all. Is it are like ads getting more expensive, or the people more expensive? The people that you're doing the telehealth with? What's going on?
Yeah, that's more of a direct impact on our core demographic. So
I see.
In the second quarter, if you look at revenues, being off of where we expected them to be, a core part of that was just the impact that we saw on our core customer. So, non-discretionary items. So the cost of gas, as an example, was up significantly. if you take a household that's making 65, 70,000 and inflation's up 6 or 7% year over year, that's several $1,000s that has a big impact on that household, which would equate to the cost of a liner. So it was a near-term impact. Inflation was one example that we saw on the cost of, or the impact to our core demographic there. Again, I think all of that's transitory. I don't think there's anything out there. If you look at the long-term potential of where we go, we don't think there's anything there from a long-term perspective that impacts the growth.
I remember, and I might be slightly off on exactly the statistic, but I remember reading something from the Federal Reserve that 40% of those making less than $40,000, which would probably be within your demographic, 40% of people making less than $40,000 are in either retail or hospitality or some form of service industry affected by the pandemic. And a lot of these folks are still unemployed, even though companies are rehiring. Some of them have lost their skill set. They haven't gotten vaccinated. The more people in this demographic are unlikely to get vaccinated, right? So it almost seems like it's going to take longer and it's going to be harder for this potential demographic to get back to profitability, so to speak, and potentially being a customer. What can you do to scale up? I mean, is there a reason maybe the demographic is lower? What's stopping people who use Invisalign from using your product?
Yeah, it's a great question, and it's all part of the strategy that we positioned ourselves for. So I think we've recently launched what we call the Challenger campaign, right? And so what that is it's starting to go directly head to head against Invisalign, and it's to help people understand, as I said before, why would I pay 3 times more when I can get a safe and effective outcome, using Smile Direct Club and their teledentistry platform. And the goal over time is for people to truly understand that messaging. And so that's exactly right. Over time, we've got to continue to move and expand our demographics to be able to take share from people who could afford to pay $5,000 to $8,000, but choose not to because our platform is more accessible for them. It's more convenient. They can do it all remotely, and it's much more affordable as well. So giving them the value for the product. So that's all part of the longer term strategy that we have to take share within the broader orthodontic category.
I was thinking about that too. How, maybe this is more of a technical thing, but how does a teledentist evaluate my gums? For example, do I mirror it? Like, how does that work?
Yeah, so they have. If you go through the process, if you order an impression kit, or if you go into one of our smile shops, or if you go to one of our dental practice partners, they're doing an initial assessment and review based on oral pictures. So you take a variety of pictures where they can see the structure of the gums, they can see your teeth and the position of them.
So it's not Zoom; they're actual pictures. That's good. Okay, that's good to know.
Yeah. They're actual pictures, and then if they need more information, so a dentist who effectively the process would be, and let's say you ordered an impression kit, right? So you'd order a kit to your home. You would do the mold directly in your home, and it creates a mold of your teeth, and you would take the pictures, you would send those into us. That effectively creates a digital image file, no different than if you went into a dentist practice. They're going to do a scan of your mouth, and that creates a digital image file. From that, we map out how your teeth are going to move throughout treatment. All that information is going to your state licensed dentist or orthodontist. There's a quality check. We have a clinical team, over 100 dentists inside that are employed by SDC, where we do a quality review prior to it going to your state licensed ortho or dentist for them to review. But they're looking at all that information. They're looking at your medical and dental history. They're looking at the oral pictures. They're looking at the scan itself or the impression and the treatment plan. And so based on all of that, they can push it back to our team and say, I want to make these changes to the treatment plan and move these teeth in a different way. They can approve the plan and say, yeah, this looks great. They could deny the plan and say, you're not a good fit for orthodontics for a variety of different reasons. Or they could push it back to the patient and say, you need to go for clearance. And so clearance would be, I need an x-ray, or I need you to go for a perio test. They see something in the gums they didn't like. And so with the pictures that we get and load into our teledentistry platform, there's so much the doctor can do with that. And so today we can treat about 90% of the cases that are coming to us from just from the information that we're gathering. And then if needed, the clinical team, the dentist can get on the phone as well throughout treatment with the patient, actually go through the video chat and understand how the aligners are fitting, triage any problems, bring them back in if needed as well. So the clinical outcomes, clinical efficacy is no different than if you're going to go into a brick and mortar practice. And that's been a critical message for us to get out there for people to understand. You're going to get a safe and effective outcome. We actually guarantee that for life now. We'll guarantee the outcome of your smile. As long as you're compliant with treatment, you wear your retainers, we'll guarantee the outcome that we're providing to people.
What's it been like trying to partner with actual dentists who have their practices? I shouldn't say actual dentists to say that your dentists aren't actual. I mean, like existing practices, right? Who may already have Invisalign units or whatever. What's that like? How do you bridge that gap?
Yeah, look, I mean, we're if they want to provide Invisalign at the same time, we're not against that by any means. I think. Okay. If you look at orthodontic care historically, as I said before, less than 1% of the market is treated annually. There's such a massive opportunity out there. And the GP market, when I say GPs, meaning general practitioner dentists, in particular, only about a third of all dentists prescribe any sort of aligners today at all. And so it's pretty low volume in the big picture of the entire dental population. And the ones that do are very low volume. So, you're going to have some that are high volume providers. You could have some that almost do none, but on average, they're only doing 3 or 4 cases every single quarter.
Oh, wow. For Invisalign, that's it.
Exactly. So it's a very small percentage in terms of revenue for their practice. So what they love about our offering is that we're bringing incremental revenue into their practice. It's highly profitable for them because there's very little chair time involved in our model, which is so important in a dental practice. It's all about chair time. And then we also bring the added value of our leads as well. So we'll go into a partner practice and we'll host a pop-up event. And so what that means is, we'll bring 100 patients over the course of a weekend into their practice that are interested in Smile Direct Club. And they'll have the opportunity to convert those members into dental patients. And so we put out an example with one of our biggest partners, Smile Brands, last quarter. We've already scheduled 1,000 referrals, be it through hygienes or other types of appointments since we've launched in a pretty short period of time. The lifetime value of that for them is $3 to $5 million. And so there's massive opportunity from partnerships and leads that we're pushing into these dental practices as well, which is another thing that they're excited about. So it's been very well received. I think there's an evolution there where we've got to continue to help dentists understand that clinically our product is no different than other products on the market today. Continuing to deliver that message to help them understand our value proposition and the impact we can have on their practice.
That's interesting. Yeah, change that. Is it like the name or something, or what has created that impression? I mean, have you if this was like, I don't know, if the name was different, would that make a difference, or is it just a matter of you're building the company? And I'm not bagging on the name. I'm just wondering, like, why is that impression there? Is it because it's online and just the price is lower, maybe?
Yeah, I think it's it's disruptive, right? Take any industry that's been disruptive. The status quo is going to push back on that, right? So it's viewed as competitive to the bottom line of orthodontists, and clearly they view that as competitive. And so the dental side.
I see. Okay. So sorry to interrupt, but what you're saying is if you sell Invisalign in your office, they're selling you the kit for $1,500. You're selling it for $5,000-$6,000. The dentist is like, hey, sweet, this is $3,500, $4,000, $5,000 a profit here. What's the profit with the Smile Direct? Is it then potentially? I mean, you said it's $1,900. What would their profit potentially be? I mean,
yeah, it's a fraction of that. So our price is the same. It's $1,950. Doesn't matter if you order an impression kit or go to a dental practice. And so that's all about what I said at the start. It's about the mission, democratizing access, making it affordable to everyone. And so a lot of that noise that's out there, to your point, is because of that sort of confrontation and what's seen as competition. I think the reality is, completely understand that as an orthodontist. As a dentist, we've been very good for the industry. We've risen awareness overall of the category. We've spent a lot of money on marketing, which has continued to drive more patients into dental practices. We've got great partnerships with dental practices. So that's a perception that we're changing over time. It's not going to happen overnight. but I think we're making good progress there. And we've got a really strong clinical advisory board as well that's helping us make sure we get that message out there properly and help dentists understand that we can be a great partner for the practice.
That makes sense. What about these? And I know there's a limit to what can be said here, but so I'm going to phrase this, I think, appropriately. Do investors need to be worried about these lawsuits?
Yeah, I think there's sort of another misperception, right, that's out there. Yeah. If you look at the lawsuits, we're generally the plaintiff, right? And so we're not the ones, and there are some where we're not, but we're generally the plaintiff in the suits. And so I think when you look at what's out there on the legal side, and there's not too much I can say given we're in litigation on a variety of them, but we think we're in a very good position across all of them. The important part is we're not going to let someone harm our brand, which at the end of the day is going to go against the mission of what we're trying to do, which is, as I said, about democratizing access to care, making it affordable for everyone, convenient for everyone. And so if someone is trying to damage the brand, we've got to take exception to that. I think that's what a lot of these suits that you've seen have been about. If you look at it from a regulatory perspective, we're in a great spot. We've won in almost 30 states since the 2020 legislative sessions. The broad acceptance of telehealth and teledentistry is something that was already underway pre-COVID. It certainly accelerated post-COVID, and we think we're in a very good position there. We've had some good wins on the legal side as well. If you look at the history of the business and where we've won, that's had a big impact on the business. And we think we're in a very good position with the cases that are out there today as well.
Any buybacks planned?
Yeah, not so. It's always something we're thinking about, right? I mean, what's the best use of our capital? I think for us, as we look at the cash that we have on the balance sheet and just the sheer growth opportunity that we have, the best use of our cash, at least for right now, is to continue to invest in the growth initiatives that we have out there. So, partnerships with dental practices, international expansion, the teen market, continuing to get our brand awareness out there, help people understand that, the clinical safety like we've talked about. So we think that's the highest and best use of our cash right now, but it's always something that we're looking at. Does a buyback make sense? Is that a better use of cash? And obviously acquisitions as well. We're always looking at technologies that we can bolt onto the platform that will continue to disrupt what we've built here over time.
Got it. Makes sense. Gosh, what else haven't I asked? I mean, that's been pretty thorough. That's answered a lot of the questions that I have. What am I missing? I mean, I know you also, because I don't own any of your stock, but I do have 2 toothbrushes and 2 tooth washing things. So thank you for that.
What do you think?
That can't be a big part of revenue though. How does that fit in? Is that sort of part of the kit that you buy?
Yeah, it's really so if you look at all the ancillary products, it's about 10% of revenue today. That includes retainment. Okay. All of those products are really about 2 things. So one, the biggest client there is Walmart. So Walmart does close to 40% of all oral care sales around the country go through a Walmart today. We're in 4,000 plus stores around the country in Walmarts. And so from a brand awareness perspective, it's great, great lead gen capability for us. And so it's introducing someone to the brand. It doesn't take a big conversion downstream of people who go from, buying a toothbrush to buying aligners for that to have a very material impact in our P&L. So there's a brand building lead gen aspect on the front end of that. But then on the back end as well, as someone has finished treatment, the ability to have recurring revenue there and own the bathroom through toothbrushes and paste and other oral care products gives us a recurring revenue stream, increases the lifetime value of those club members. So it really does both of those: lead gen on the front end, recurring revenue on the back end, and sort of wraps around the core aligner business.
That makes sense. Okay, got it. What else? What else do you think I'm missing here? It seems to me like, in my understanding, is your biggest challenge is really convincing dentists that they can do more business more efficiently working with y'all, and therefore make more money by selling the aligners and creating that sort of relationship. It does sound like a hard sell. So I wonder what percentage maybe of your revenues come from dentists with individual practices versus people going through your website.
Yeah, the dental side is very, very small today. So that's a
Okay.
new growth initiative that we've only launched. If you go back to last fall, we were still in a pilot. We only launched, call it this time last year, a little bit later, out of pilot mode with our first practice. So it's a newer growth initiative. We've grown that to about 500 practices over the past year. We've got close to 2,000 total in our network, and so it is growing rapidly, but it's a smaller portion of the business today. We think important for longer term growth, but something that we're in the early stages of building.
Got it. So mostly online then. So then, what's your most effective sort of advertising? Is it just search engine ads, or what do you like doing?
Yeah, I would say all the above. So our strategy broadly is about driving people to the website. So if you think about how they get there, about 20% of the business today comes through referral. And so a pretty meaningful portion is referral driven. A large portion is organically. We've got over 50% aided awareness. So if you were walking down the street, 1 in 2 people are familiar with the Smile Direct Club brand. And so organically are coming to us when they're thinking about straightening their teeth. And then a third part of that is marketing. But we're driving all of those to the website, empowering them to order an impression kit, book at a dental practice, or go to a smile shop. And on the marketing side, it's pretty broad. We're about 60% of our spend is online. We've got about 40% of our spend is a combination of offline, so TV, out of home, things like that. And online, it's all the platforms that you would think. So Google's a big part of that. Facebook and Instagram are big parts of that. But it truly is a multi-touch approach where we'll touch a consumer across multiple platforms. If you think about the journey that someone has been on, having crooked teeth has been a lifelong problem for most people. Yeah. And so 90% of people have crooked teeth, could never afford to straighten, and something has happened to say, now's the right time. Could be a new job or a wedding or a divorce or a birthday, whatever it is, but there's an event that drives them to say, now's the time for me to do it. And so for us, it's really about generating the lead and then cultivating that lead over a long period of time to get them to ultimately convert to buying aligners. So it's a pretty complex, marketing strategy. We do almost everything internally. We've got about 100 team members on our marketing team, and do pretty much all of our creative and marketing in-house today.
What's the time frame if somebody wanted to start the process? I'm sure this is on your website, but I'm just going to ask you.
Yeah, so on average, the treatment length is 4 to 6 months on average, and so there's not a definitive line within there, but that's an average treatment of about 4 to 6 months that someone would go through.
Okay, and I think probably the last question I have is what do y'all project in terms of path to profitability? I think Bloomberg has y'all as an estimate here of these are analyst expectations somewhere around 2024, maybe profitable, right? 25, somewhere in there.
So for us, I think the important metric for us is really adjusted EBITDA. So we're a growth business. We've spent so much in CapEx and other growth initiatives that you'll see that depreciation and amortization, hitting the P&L more so than other businesses. So the right way to think about it for us is adjusted EBITDA. The only real adjustment to that is stock comp. So there's not a whole lot of things that flow through there, as you might see in other private equity type businesses, as an example. But from an EBITDA perspective, we've actually been profitable for a while. We weren't this past quarter with the down quarter that we had, but we've turned profitable in Q3 of last year, and obviously very focused on getting back to that EBITDA profitability. But that's the main metric that we're focused on. If you look at the long-term metrics that we're going after there, top line is 20 to 30% annualized growth is what we're focused on achieving. And adjusted EBITDA margins off of that would be about 25 to 30%.
Nice. Yeah. Okay. Yeah. That it seems pretty consistent, at least with Bloomberg. Their conglomeration of all the analysts, they seem to put you between that 20 to 30% over the next few years of growth. So that's exciting. And then that makes sense on focusing on the EBITDA, which then they're suggesting getting back to EBITDA profitability by 23. You think you can make it happen in 2022?
Look, we're not giving forward guidance, right now. But what I will say is the long-term targets that we put out there is what we're focused on executing sort of year in, year out. If you look at the next 5 years, the goal is to ramp to that 25, 30% by the end of that time period.
That makes sense. That's awesome, man. Okay. What else? Did I miss anything? I mean, this was really insightful. I really appreciate you coming on. I think it's worth just a quick disclosure. I'm not paid by y'all, and I don't own any shares yet. Who knows? Maybe we'll buy some shares. But I like to put that out there. Otherwise, you get the troll comments. People are like, "Oh, how much did you get paid for the interview?" Right. I got 2 toothbrushes and 2 tooth cleaning things. That's it. Okay.
Well, give us some feedback on the brush. We'd love to have it.
All right.
I think in terms of, things we missed, I don't think so. I think we covered it. I think that just to kind of recap for us, I mean, our belief is we're in the very kind of early stages of what we think is just a massive market opportunity out there. Yeah. As a company, very mission driven, it's all about democratizing access to care. Like I said, we're disrupting a category that for a very long period of time has provided a 3x markup associated with care. We're removing that consumers, making it affordable to everyone, making it convenient for everyone, and on top of that, guaranteeing that outcome for life. So, just remain incredibly excited and optimistic about where we think this brand can go over time, and doing it by at the same time solving a very important problem for people, which is fun.
Yeah, no, I love that. I think that's great. Yeah, I think probably one thing, if folks are really excited about investing in new opportunities, one of the best things I always suggest is just try the product.
Yeah.
So that I might have to sign myself up for a 4 to 6 monther, and I think when you're a user of the product, it all makes so much more sense.
Yeah, absolutely. We'd love that. We love feedback too. So, if you do go through treatment, definitely send in feedback. And for our investors as well, we do have a stock perks program where they can get discounts and other things like that too, which is a nice perk.
Oh, that's interesting. Okay, awesome. Well, hey, thank you so much. This was a pleasure. Anything else you want to add? Any shout out you want to throw in there? But otherwise, I'm done. Thank you so much. I'm going to go make myself another cup of coffee.
Thanks for having me.
All right, perfect. Well, thank you so much. Smile Direct CFO here. Thank you again. And folks, I'm going to end the live stream. I will post this video separately, so it's a standalone Smile Direct as well later today. So thank you, everyone, for being here. Thank you again. And shout out to Smile Direct. Thanks again, everyone.